Welcome to ForexTV.com. It's Tuesday, February 26th. I'm Remy Hookie for your New York Forex Market Buzz. In afternoon trade as of 12:10 Eastern Time, Eurodollar is at 1.4902. Sterling dollar is trading at 1.9787, while dollar yen is around 107.64. U.S. equities are back up on the day and have pared back earlier losses. This morning we got a slew of U.S. data, starting out with PPI. It was up 1% month over month in January, which was greater than expected. In the previous 12 months, producer prices climbed 7.4% year over year. And the Conference Board's Consumer Confidence Index tumbled to 75 in February from a revised 87.3 in January. The reading was the lowest since February of 2003. And S&P Case-Shiller's Home Price Index fell 9.1% year over year in December from the 7.7% decline in November. Home prices fell 8.9% in Q4 from a year earlier, the biggest decline in 20 years of record keeping. This afternoon, I'm joined by Omar Esiner, Senior Market Analyst at Ruesch International. Good afternoon, Omar.
Good afternoon.
Thanks for joining us today.
Thank you for having me.
Well, U.S. stocks are up again as IBM approved a $12 billion stock buyback, and also on the heels of some positive news from retailers. But inflationary pressures continue to exist as growth continues to disappoint in the U.S. So, Omar, first tell us how fundamentals will affect the majors in the near term.
Well, I think clearly the growth risks remain to the downside. We've seen that in the data over the last couple of weeks and really over the last couple of months. So I think going forward, continued signs of slowing growth here in the U.S. will only play up fears of a recession. And I think, of course, that has been a negative for the dollar and will continue to be. On top of that, with rising inflation now, I think in the very near term, that might be seen as mildly dollar positive, as it could limit the scope of Fed policy easing down the road. But I think in the medium to long term, rising inflation at a time of slowing growth is really going to spell a disaster for the U.S. economy. And so I think the concerns about rising inflation will ultimately be expressed by the Fed, as we're seeing is starting to be. And I think that's what people are going to be paying attention to tomorrow in Bernanke's testimony.
Okay, now that we've highlighted the fundamentals, let's move on to price action in the majors, starting out with Eurodollar. The dollar has weakened significantly against the euro and sterling today, and Eurodollar is above 149 right now. So let's talk ranges. What is your forecast for Eurodollar as well as sterling dollar?
Well, I think Eurodollar is going to continue to be biased to the upside, especially if we see stocks perform as they have. The Dow's up about 140 points right now, and with the dollar's yield at only 3%, I think the rising appetite for risk leaves the dollar vulnerable as a funding currency for investments in higher yielding assets like the euro, for example. So, as I mentioned, I think we'll be biased to the upside in euro dollar. I think the top of the range today should be capped by around 149.20, but that is a key level. So if we break that, we could see a retest of the recent high in euro dollar at around 149.40.
Okay, let's shift our focus over to the dollar block currencies. We saw the Kiwi hit a 23-year high against the U.S. currency, and also Aussie is trading near the 93 level against the U.S. dollar in afternoon trade. So briefly, if you could give us your fundamental and technical outlook for the Aussie and Kiwi.
Well, I think these two currencies as well are going to be biased to the upside, given the fact that we've seen stocks perform as they have. Again, the Dow is up sharply. So I think the relatively elevated level of investor risk appetite is keeping these currencies well bid. I think the dollar, the Aussie dollar, that is testing 93 cents right now. It'll probably be biased to the upside and probably make a test around 93.50, especially given the fact that the Reserve Bank is expected to raise interest rates again next month. Kiwi, I think, is likely to ride on the Aussie's coattails. We're not expecting any action from their central bank, but given its lofty yield and given the fact that commodity prices are on a tear, I think the Kiwi should remain biased to the upside as well.
Okay, and since you mentioned risk appetite, last but not least, let's take a look at dollar-yen as well as the yen crosses. Briefly, if you could tell us how investors place their positions for their yen trades.
Well, dollar-yen has held up relatively well despite broad U.S. dollar weakness, and again, that's the result of the high level of investor risk appetite right now. We're seeing the yen with its rock bottom yields being sold more aggressively than the dollar, and that's why, again, dollar yen has held up. But I think any slip in risk appetite, if we do see stocks come off, then I think the U.S. dollar will be biased to the downside. It'll probably be vulnerable to a test of 107 against the yen, and below that, probably about 106.20.
Okay, Omar, as always, thank you very much for insight and analysis.
Thank you.
This has been your Forex Market Buzz with Omar Esiner, Senior Market Analyst at Ruesch International. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.